Good morning. My name is Janice Myers, and I'm the CEO of the Canadian Real Estate Association, and it's my pleasure to bring opening remarks. Thank you for being here on this balmy January morning. So real estate decisions are made one community at a time. Realtors work directly with buyers and sellers across the country, responding to distinct local market needs and opportunities. At the same time, housing has become one of the most closely watched issues in Canada, shaping household decisions, influencing economic confidence, and remaining at the center of public and political debate. Here in Ottawa, we continue to see the federal government focused on economic sovereignty and long-term competitiveness, and those conversations matter. But we also know that for Canadians, the issue that remains most urgent and most personal is housing. Because at the end of the day, Canadians care deeply about having a place to call home, a safe, stable foundation for their families and for the future. Market conditions today are influenced by a variety of factors, including interest rates, affordability, population growth, shifting demographics, and changing housing stock, all interacting in real time. That's why the work that we do at CREA is so critical. We're here to provide evidence, insights, practical solutions, helping decision makers understand what's happening on the ground and advocating for policies that support a healthier, more accessible housing market for all Canadians. Thank you again for joining us today as we present our latest forecast for the Canadian Real Estate Association in 2026. Before we hear from Sean Cathcart, our senior economist, I'd like to invite our chair, Valérie Paquin, to say a few words in French.
Merci Janice. Je m'appelle Valérie Paquin. Je suis la présidente de l'Association canadienne de l'immobilier. Les décisions en matière d'immobilier sont prises à l'échelle locale. Les courtiers et agents immobiliers travaillent directement avec les acheteurs et les vendeurs à travers le pays en tenant compte des besoins et des occasions uniques du marché local. Parallèlement, le logement est devenu l'un des enjeux les plus suivis au Canada. C'est un enjeu qui influence les décisions des ménages, affecte la confiance économique et demeure au centre des débats publics et politiques. Ici, à Ottawa, nous continuons de voir le gouvernement fédéral se concentrer sur la souveraineté économique et la compétitivité à long terme, et ces discussions sont importantes. Cependant, nous savons également que pour les Canadiens, la question la plus urgente et la plus personnelle reste celle du logement. Car en fin de compte, les Canadiens tiennent profondément à avoir un endroit où ils se sentent chez eux, soit un environnement sûr et stable pour leur famille et leur avenir. Les conditions actuelles du marché sont influencées par de divers facteurs, notamment les taux d'intérêt, l'abordabilité, la croissance de la population, l'évolution démographique et le parc immobilier changeant, qui interagissent tous en temps réel. C'est pourquoi le travail que nous accomplissons à l'ACI est si important. Nous sommes là pour fournir des données, des informations et des solutions pratiques, aider les décideurs à comprendre ce qui se passe sur le terrain et préconiser des politiques qui favorisent un marché de l'habitation plus sain, plus accessible pour tous les Canadiens. Nous vous remercions de vous joindre à nous aujourd'hui pour la présentation de nos prévisions les plus récentes pour le marché de l'habitation canadien en 2026. Je donne maintenant la parole à Sean Cathcart.
All right. Good morning. Thank you very much, Janice. Thank you, Valerie. Good to be back. Thanks for coming, those of you in the room and online. I'm going to be showing some charts today when I do this presentation. I understand that that's going to be viewable to those of you in the room. If you're online, just get in touch with us through CREA.ca. We can pass this deck along so you can see what I'm talking about. Now, we're here to talk about our forecast for the resale market, in particular for 2026, but we're really talking about a lot more than that. Over the last year, we've really sort of have a merging of some of the bigger housing ecosystem data that we use more on the policy side of things for like, how have we evolved over the last 20 years? How do we get into this mess? How do we get out? But you can also look at that same data in a much more narrow sense to say, how's that going to affect the market in 2026? So that's what I'm planning to do today and hopefully kill two birds with one stone. But I'm going to start off with interest rates, obviously, is a major factor in our forecast. It was last year, too. And if you were here, you might recall I stood up here and said, we think that first-time buyers are going to come back into the market this year with rates having gone from 6 to basically 4% for a mortgage rate, unless the Trump administration announces 25% blanket tariffs, which they did 5 days later. So sort of took the rug out from under the spring market last year. We did have a rally mid-year, and we expect that to continue in 2026, barring any other major black swan events. We look on the chart here, I've got discounted mortgage rates, aggregated, fixed, and variable for 5 years from our friend Rob McLister. It's not the Bank of Canada's rate. It's not the posted rate that the banks have on their website, which no one actually gets unless you've got a terrible credit score. It's the rate that most lenders are getting and stress tested against. And as you can see, it's basically gone from 6% to about 4%. Variable's a little bit better. Just to give you an idea of the affordability change there, if you had a $500,000 loan, that's the difference between $2,500 a month in interest and $1,600 a month in interest. Still not great and not as good as some would hope, which might be 3%. But as the Bank of Canada said on October 29th, that's about as good as you're going to get for now. So the Bank of Canada is pretty much done cutting. We think that's an important factor for first-time buyers because many of them have probably been waiting to get the absolute lowest rate possible before locking in. We do definitely think that that is a factor that could bring some off the sidelines this year, despite affordability not being what they might like it to be. I'd like to switch now to some broader housing ecosystem data, which is from StatCan and CMHC. It's what the housing stock looks like and what we're building, and what the households look like who need housing. So very high level. And one of the things you'll know is that population growth is expected to be much slower than it has been due to mostly massive reductions in temporary work and student permits, but also a reduction in our permanent resident targets. And so you can see on the screen here, I've got year-over-year population growth in Canada. And, you know, this is the most recent one from, sorry about that, from Canada Day of this year, right back down to pretty much where it's been for decades. And really the aberrant data was 2022 and 2023, 2024. We've just gone back to normal. This is not a headwind for housing, as some have said. It's really just a much more moderate tailwind. Our population's still growing. But under the surface of that 41.6 million people, which is up 4 million from before COVID, by the way, the demographic distribution is changing over a very long period of time. It's called a secular trend, not in the religious sense, but in the non-cyclical, non-periodic. We are aging, and that's been true for 50 years, and it will continue to the point where now the baby boomers, the Gen Xers, and all the millennials are in middle age all at the same time. And middle-aged people have much higher rates of home ownership. They need a place of their own. Coming up behind them is the Gen Zs, which is another huge cohort. So that's the big picture. The narrow picture for how this could affect the market in 2026 is first-time buyers. So let's look first at 30 to 34-year-olds. That is the largest 5-year cohort of people in Canadian history ever, right now. If you look at the 34 to 39-year-olds or 35 to 39-year-olds, obviously a lot of first-time buyers have been locked out of the market for about 4 years now. So a lot of people who may have bought at 33 to 34 are now going to be re-emerging at 37, 38. That's the next biggest cohort of population in Canadian history. And the younger folks that might buy condos in their late 20s, that's the third largest cohort in Canadian history. So we don't have a database of pent-up demand. Our members do in their phones, and we expect a lot of them to show up later this spring. But we can look at the population and say that there's a lot of people in that cohort that have been sort of like water building up behind a dam over these last 4 years when they couldn't get in, that are going to come back eventually. It's kind of like squeezing the toothpaste tube, you know? Less this year more equals more next year, typically in the housing market. And of course, to anyone that's asking the question, well, maybe, or making the statement that maybe people's propensity to want to become homeowners has gone away, and that's why homeownership rates are falling. Not true. Abacus Data did some survey the polling last year. You know, in that millennial cohort, 75% of non-owners say they still want to buy. If you look at under 30, 86% of them say they do. So the propensity has not gone anywhere. And of course, this has been true for 50 years. The inflow of new households is about 5 or 6 times the outflow of older folks divesting of a home back into the stock. The baby boomers are not at that stage yet, so we've not reached that equilibrium. So we've needed to be building this whole time. So have we? If you look at CMHC data, we're building something like, 250,000 units a year. But it's not the same 250,000 as the 200,000 we built 20 years ago. It's a very different composition. CMHC data for, I know that if you're not in the room, you can't see this, is very choppy. That's just the nature of completions. If we run it through a trend cycle, it becomes much more clear. And you can see that over time, that we are building a lot more homes now, but we've switched in 20 years, basically the bottom line here is we've switched over the last 20 years from building low-density detached homes primarily, all the way through to building mostly apartments, without building that missing middle. It's why the term was coined 15 years ago, but the missing is still in the name, right? And that's one of the biggest problems here is that for people in their 30s who are saying, I need something big enough to start a family in, it's just, it doesn't exist. Or it exists in the legacy detached space, which is very expensive. If you take the purpose-built rentals out, we've been building fewer units every year for 20 years. If you take the small condos out, we're down to about, a third of completions are family-sized that you can own. So, and if you, look at the proportion of single-detached completions versus apartments, they basically switched places in the last 20 years. So we've shot right through the missing middle, didn't build any of that, and we say we're building this many units, but they're not units that are going to be suitable replacements for the thing we stopped building. And so you end up with a housing stock that looks like that. Lots of single detached homes, lots of apartments, and nothing in the middle. That is our current housing stock. It's actually StatCan data from Q3 of 2025. You can see that most of the apartments are rentals, most of the single detached are ownership. So really, if you're a first-time buyer, the most likely way that you do that is go from a rental apartment to a big detached home. Not a lot of good options in the middle. And the problem is, of course, it's the land that's underneath these things that qualifies it as low density that's gone up in price so much, right? Not the house. They've got a lot of starter homes out there that are sitting on $500,000 worth of land now, so they're not starter properties anymore, right? So we got this missing middle problem. And actually, we had our Hill Days up here, and we were meeting with MPs, and I was just playing around with the data. And it's often been said that this is kind of like missing rungs on a ladder. You can't climb up because the gap is too big. And I thought, if you turn the graph sideways, it actually looks like the metaphor. And so from a policy perspective, over the next 10 years, if we do double construction, we know what we need to build. From a 2026 forecast standpoint, you can have a lot of first-time buyers come off the sidelines, but if all that's out there for them to buy is either too small or too expensive, you're going to have a problem, and you're going to be limited in terms of how many transactions that actually ends up being, right? So if you look at our forecast for our data, this is from 1980 till now, we're expecting a 5.1% increase in sales in 2026. So not a huge increase, but we could get a 10% increase in 1 month if a lot of people come off the sidelines. We're trying to be conservative here because affordability is still going to be a constraint. Supply not being around in big numbers in many parts of the country is a constraint. And supply just generally that's affordable in the housing stock not being around existing is a constraint. And you can see if you look at a long-term trend line, we're way below that. And that's expected to continue because what's growing in the housing stock is mostly, like in a big way, is rental. And so that's not going to play into our data in the resale space. What it means is that stuff that you can own that people are still striving after is relatively more and more scarce because we're not building that, but that's what people are still going after. So what happens is it plays out on the price side when more than one sort of young first-time household come to buy the same house. Breaking it out by province, most of the increase in sales this year is expected to be Ontario, BC. That's been our forecast for a long time. They've got a lot of room to recover. They're very low right now and a lot more supply for people to buy. Whereas other places are more constrained. There's provinces with 20-year lows for supply still, and where sales are still flying pretty high. And there will also be a constraint in some of those smaller provinces because a lot of that reduction in population growth was disproportionately affecting them. The population growth they've never seen holding those markets up in recent years, and that's gone. If you look at the number of months of inventory in Canada, supply has picked up over the last 4 years, but we're only right now at 4.5 months of inventory. The long-term average is 5. We're on the tighter side of balance. And an important consideration this year is if you get a lot of first-time buyers coming back disproportionately, first-time buyers absorb inventory. They don't put another one back on when they sell. So the thing that pulls down inventory quickly is lots of first-time buyers. And so we think that there's a risk, it's not in the forecast right now, there's a risk that this could tighten the market very, very quickly if buyers come in and start absorbing inventory all across the country. We've seen it in the past in Toronto, Vancouver, but if it happens at the national scale, we could be back in a seller's market, even conservatively, like by the summer or fall. And lastly, average home price. We're forecasting an increase of 2.8%, a little bit better than inflation. But really it is more like inflation. It's just that there's a structural element that if you have more sales in BC and Ontario, even if prices aren't going up there, that those are more expensive transactions in the millions of dollars that raise the national average. It's compositional. If you look by province, Ontario and BC and Alberta are expected to have the smallest increases, below inflation. Ontario, the lowest of all, no surprise, that's still the coolest market in the country. And all the small provinces are expected to have gains of, sort of 3, 4, 5, 6%, which sounds like a lot, but that's a major slowdown from 6, 7, 8% just last year. And so with that, thanks very much for listening. And I guess we'll move on to questions in the room.
Jordan Gowling, National Post. I just want to touch on what you talked about, the missing middle in the housing supply. In your view, what are the factors that have led to such a, short of those homes that people want to buy? A lot of people talk about development charges, taxes, just the cost of land. In your view, what are the main issues that are leading to that shortage?
I think the bigger picture on that one would be more just the way we came out of World War II. Is a much longer story and built out very, very quickly when everyone suddenly had a car, and living, 5 kilometers out from the city center was a farm field. So, a lot of the ultra low density housing that was built in really great, sort of what we consider in the city areas now, tract housing of the 50s, 60s, and 70s, was ultra low density. I live in one of those. I could fit 8 of my house on my lot. And those are all still out there, right? And so there's limits to how far you can grow out just by virtue of commuting times and that sort of thing. And so to increase density, the easiest way to do that is to go to high density, which is to build up. And so we've been able to accomplish a lot more units that way. There's been incentives for developers to do that. And, I'm not in the building industry, but I suspect that, and we've heard that, missing middle type housing, especially affordable type housing, for like just regular income folks, is sort of one of the least money-making things you can do in the building industry, because you still got to have the land, which is expensive, and then you're selling the product for less than some of the more fancier big detached homes, right?
Build Canada Homes, the new housing agency that Prime Minister Carney announced this fall, it just entered its first 100 days. Its primary mandate seems to be non-market housing, affordable housing, sort of closing the gaps on that front. But Carney also talked about doubling the pace of construction, that by government leading with this agency, this will somehow make the construction industry more competitive, the housing industry more competitive. In your view, do you think that's realistic?
That's a great question. You almost answered it for me. Yeah, that's exactly it. The primary focus initially of Build Canada Homes is non-market. That's sort of the urgent thing we really need to get on right away. But the medium-term part of that story is using modern building techniques and materials. So building in factories, go figure, in Canada where we have winter, and where many of the trades, again, demographic aging, are aging out of the trades. That is a way that, so for years, CMHC and the Parliamentary Budget Officer would release these numbers and say, we need 3 million more homes than we're going to do. And I would say that's impossible. But I think this plan, and we advocated 2 years ago at CREA very strongly, it was our first number one ask to say, you need to look into modular, panelized, mass timber. This is the kind of stuff that can actually scale to the point where it's not anymore a zero-sum game of what 250,000 units are we going to build? Is it going to be non-market? Is it going to be rental? Is it going to be ownership? Where we can do enough that we do all of that and actually catch up and start to solve the problem of this deficit in housing that we have by building a little bit more of everything, and which will allow people to move around more at different stages of their life, including moving into your first home. And a huge one is going to be, again, with demographic aging, as the boomers get more into their sort of 70s and 80s, options for them to downsize, which would free up a lot of great family housing, right? If they want to do that and they say, there's nothing like that for me and I want to stay in my community, that's another huge opportunity there. But yes, initially non-market, but in the fullness of time, the problem is in the market, right? Non-market is a very small, you're not going to double construction and make it all non-market. So obviously, I think the implication there is medium 5, 10 years out is you're really filling in that missing part of the market housing. And maybe we'll stop the homeownership rate from falling off a cliff, which it has been doing since 2011.
Abigail Beeman, CTV News. I spoke to someone yesterday who sort of fits your profile exactly of a millennial first looking to be a first-time home buyer, and what really struck me about speaking to him was that his household income is above $200,000 and he's still struggling to save up enough to buy a home. And so I'm wondering if you can talk about that intersection between the missing middle of supply and affordability for people like that who you know should be able to save enough to get into the market but are still having trouble making that down payment.
Sure. When you talk about density, it's really about housing units per acre. So it actually is a land consideration. And so what missing middle would be is, you know, if you take a house that would have 10 or 15, 20 years ago, we would have considered a starter house, which still is a starter house, but the land that it sits on has gone from $100,000 to $600,000. It's no longer that package. Real estate's a package deal, right? The land and structure of a lot of this detached housing is no longer affordable, even to people making well above. If you don't have equity from another purchase or equity from your parents' house, which a lot of people are doing, you just can't make it happen. And so the way that you solve that is to have family-friendly type housing that's big enough to have, say, kids or maybe an older aging parent in, that sits on a third or a quarter of the land that a lot of these detached houses sit on. That's what medium density is. But all we have is low and high, pretty much. And so that would solve a lot of that problem, right? So that you're not spending $500,000 for a giant front lawn that you just push a lawnmower around on Saturdays. Right? It's not the highest best use of a lot of our land. The problem is it made sense in the 1950s and 60s and 70s, and it's still all there today, right? And it's funny because the term missing middle was coined 15 years ago, and every conference I go to, everyone talks about it, and they all agree. Everyone's like, yeah, obviously, but it just, for whatever reason, didn't get built. From whether it's a policy thing or it's just what the builders chose to do, but. The point I'm making is that's the situation we're in today. It explains a lot of the housing crisis that we're in today. And in fact, we did a lot of meetings around Ottawa with the new government in the second half of last year, meeting with senior policy people who are, I'm guessing, paid really well. And every time we told this story, they said more than once, hey, that's me. So exact to your point, right?
Do you have any other solutions to offer for that missing middle from your standpoint?
Well, the problem with that one is that it's a long-term thing. It's not something you can make happen overnight. So I think the fact that, the best time to have done that stuff was 15 and 20 years ago. The next best time is now. And we have a government now that's throwing a lot of money at this and has a big plan that right in it says we're going to double construction. Whereas just a couple of years ago, we had our housing agency saying we would have to double our construction, but we can't do it. So I think it's a good place to be in. I think we'll be in a better place 5 or 10 years from now. But it does take time. And I feel like there is a generation of younger millennials and older Gen Zs that are going to have a tough time being in the middle of 15 years ago when things were affordable and 10 years from now when they might be more affordable again.
Craig Lord with the Canadian Press. You mentioned that last year the Trump tariffs and the trade war upended some of the forecasts for recovery. We are still in that trade war. What gives you confidence that we will see that rebound materialize starting in the spring?
Sure. So I think I mentioned right at I don't know if I mentioned this at the beginning when I said, 5 days from now, if the Trump administration, and then they did, right? So the 25% blanket tariff being announced happened and it didn't happen, right? Because the announcement happened and that's scared everyone to death because that was going to be maybe the biggest headwind our economy had ever faced. Conservative economists were predicting 1 million or more job losses. And then that actually didn't happen, right? And so the situation we're in now is not 25% blanket tariffs, which would be a disaster. It's, as the Prime Minister Carney says, the best deal that any country has. And so it's much more, if you're in a city that does, in Hamilton that does steel, or in Southern Ontario that does cars, or in a forestry or steel aluminum town, it's bad. But in macro sense, we've seen a lot of buyers coming back. It's a lot of confidence coming back compared to at least what it was 1 year ago.
What are the risks now on the horizon that could be that incident last year that upended the forecast? What are you watching for at this point that could affect these figures you're putting up today?
That's a great question, Craig. And, I take an extra deep breath every morning over my coffee when I open my phone. because it could be anything and it could be something big, but I don't know. There's nothing like last year where it was like, this is the thing that we think might happen, which would be bad. There's a lot of risks out there, but I couldn't pinpoint one. So I'm going to just, at this point, cross my fingers and hopefully we can continue on the way we've been at least.
I can squeeze in a third question. The federal government has announced workforce reductions coming this year. That's putting a lot of anxiety in people in Ottawa, other cities that have major federal footprints. What impact do you expect that's going to have on buyer demand this year?
That's another great question. So I was around for the Harper cuts, which were the least severe. So the Chrétien Martin ones were severe. These ones are pretty sharp that they're proposing now. The Harper Flaherty ones were the least severe of all. But for that reason, people in Ottawa sort of felt like the sort of Damocles was sort of hanging over their head because the big cuts hadn't happened yet. One thing I would point out about in Ottawa is that most of the cuts that they're talking about in the budget have already happened. They already happened in 2025. There's a lot of early retirement. So of that 41,000, like something like 25 or something has already quietly happened. And so I think that the faster they can sort of rip that Band-Aid off over the next 3 years, they say 16,000 more, it's really about a confidence game. It's less about the actual job losses, and it's more because they're not mostly job losses, they're early retirement and that sort of thing, right? And just attrition. The sooner we can get that idea out of people's heads that the next shoe is going to drop, the less the impact will be on the Ottawa housing market. To be honest, I'm not seeing it now the way I've seen it in previous go-rounds with reductions in the federal workforce yet. And it's been a year, so.
I just wanted to follow up on the 25 to 39-year-old cohort. Is there a risk that they give up on home ownership altogether? And is there consequences to the housing market if that happens?
So many of them already have, or that's what they're saying. If they said that 2 years ago and they were looking at what a 6% interest rate would mean for them passing the stress test and paying a mortgage, I could see why they would say that. I think that maybe we might have some people that would have said that saying, well, actually, no one expected rates to come down this fast. And so I'm hoping that a big part of the advocacy work that we've been doing and talking about missing middle housing in the ownership space is restoring that pathway that has been eroded to ownership. It's not, you survey these people and they don't want a 2,500 square foot 4-bedroom house. They just want something that's big enough that they can put their name on and pay themselves rent for 25 years and then have it paid off as opposed to increasing rent for the rest of their lives, right? Everyone understands the value of that. And it doesn't have to be big and it doesn't have to be fancy, but it can't be a 1-bedroom condo. And so a lot of the advocacy work we're doing is trying to restore that idea that I'm going to be able to get what everyone else before me got. So I think it's hopeful in that sense, but again, it's a long-term thing. We're just at the stage of only just now launching Build Canada Homes and getting in there with this messaging so that we don't spend 10 years building maybe the wrong stuff again.
We have a question from a journalist on Zoom, en français, je crois. Mégane Foy, la parole est à vous.
Oui, est-ce que vous m'entendez?
Oui.
My question for you is about the Quebec market. Why is it so different from others, even in 2026?
Sure. One major difference in Quebec is that the home ownership rate is much lower. So in that sense, there's almost scope for if people want to start flowing into the housing market, there's more scope for that to happen. And that has been happening. So Quebec is one of the hottest markets in the country. You know that Quebec city prices are up more than any other city right now. They're up 17% year over year right now. So what makes it different? Well, I mean, it's obviously a unique place. I lived in Montreal. I loved it. I've long thought that Quebec City was the most underpriced housing market in North America. It's beautiful. But because it's been underpriced, it has that relative affordability advantage. Same reason why New Brunswick's been hot, Nova Scotia, PEI, Saskatchewan, Manitoba. It's places that are still relatively affordable in an inflation crisis. And all of those markets, your Saskatoons, your Frederictons, have been doing well in this time. So Quebec looks a lot like its East Coast neighbors for that reason. But Quebec City, I'm not surprised that people finally got the memo that that's a great place to live. And you know, to this day, is the hottest market in the country right now.
Thank you.
Sure.
And we have one last question from Jane Switzer. Please go ahead. Jane, do you have a question? I believe you are muted, Jane.
I'm sorry, can you hear me now?
Yes.
Thank you. So Sean, you mentioned that you mentioned slowing population growth. Just wondering if you have any commentary on how the scale of that will affect sales of prices in the next year.
Sure. Well, I mean, the population, you know, it's whenever you look at a year-over-year number, oftentimes it's more a story about the previous year. And in this case, you know, a big decline in population is from levels that were arguably completely out of control. And they're back down to sort of much more sustainable normal. So I don't expect it to be honest, the biggest reductions are in the temporary student and work permits, which I anticipate will much more heavily impact the rental market, where a lot of those folks were living, which has already cooled down quite a bit, and we're building a ton of it. So I expect that this will be the year that the rental market really softens even more. And you know, I think that there's plenty of demand to buy the housing that's in the resale market at this point. So I don't expect it to have a huge impact on our numbers.
Thank you.
Thank you. Merci. C'est ce qui conclut cette conférence de presse. This concludes the press conference.
Thanks very much.